Kenya's second largest cement firm, ARM Cement, posted a 28% rise in first half pre-tax profit, helped along by a rise in cement sales in the country, and it forecast a strong performance for the second half of the year. The cement manufacturer, which exports to the East African region, said pre-tax profits for the 6 months to end June jumped to 1 billion shillings. We spoke to Surrender Bahita, the Deputy Chief Executive of ARM Cement, for more.
The company is now operating in 4 countries. We are operating in Kenya, Tanzania, Rwanda and South Africa. The geographical diversification has been a key driver of our growth this year. The first quarter for Kenya was stable because of the election and the process. But our presence in the other countries helped us to increase the sales. The key drivers for our business growth is cement. Cement has grown by over 34% overall in our business portfolio. It was driven by increased sales in Tanzania. In Tanzania, we commissioned our plant last quarter of 2012. That was fully operational in the first half of this year. And Tanzanian operations as well as the Kenyan cement business have contributed to the growth of the company's business.
We have seen new players coming into the Kenyan market. How are you faring and how do you rate yourself when it comes to the competition?
Now, one of the key advantages which Athi River Mining ARM Cement has is that we are essentially a clinker manufacturer. The new capacities which are coming up in the region are people who are putting in grinding capacity. Now, manufacturing clinker captures the entire value chain inside the country. It captures the entire cost chain. It gives us the cost advantage over the others. So yes, the competition is going to increase. We know that, but what can we do? What we are doing is putting up new capacity in the region so that we should be able to compete with the competition. And the key is putting up clinker capacity.
Looking at your expansion strategy, you mentioned there that you're looking to increase your capacity. Maybe you can give us an update on some of the plans that are in the pipeline.
As of this moment, we are focused on completing the Tanzania project, which should be completed by the end of this year. The Tanga clinker project should be up and running by the Q1 of next year. It's at that point of time that we will sit back and then once again at the board level decide which are the areas on which we want to focus on, which are the industries we want to focus on, which are the countries we want to focus on. But yes, we do have mineral deposits in several other African countries.
On the back of what you've just mentioned, you say that the Tanzania plant will come on board in the first quarter of 2014. How do you see this affecting your full year performance?
By 2015, we want to be a company with a turnover of close to $300 million and an EBITDA of close to $75 to $80 million. So that's our 5-year projection. Now, the new capacity which comes up in Tanzania next year will double our Tanzanian capacity. Tanzania today contributes close to 30% of our business. A doubling of that is going to create a significant growth for the company and for the group.
Besides the convertible bond that you have with the IFC, are there plans to raise additional capital in the near future?
You know, we completed our last capital raising plan in October last year. That's when AFC came in with a convertible bond of $50 million. That has given us all the funding which we require to complete our expansion plans till 2014. So in the near future, in the short-term future, no, we do not have any capital raising plans. But then capital is the key to growth. And if we have to become a regional company, then at some point of time, yes, we would be again raising capital to support our expansion and growth across the region.
And finally, looking at the operational costs, what are some of the risks that you actually see in the second half that might affect on your production costs?
Power, for example, is a challenge for all manufacturing companies. Now, the challenge comes in 2 areas. One is the price of power. Now, we are probably 2 times or 3 times as expensive as Egypt or South Africa. Now, that's a challenge in itself. We have to be globally competitive because we are a part of the World Trade Organization, we are a part of COMESA, we are a part of EAC, so we have to be globally competitive. But our energy costs, which are nearly 50% of the cost of manufacture of cement, are 3 times the cost of Egypt, for example. So power is not only the question of pricing. If you remember, a couple of months ago, there was a move to increase the prices, which the present government has put an end to, and probably that might get revived. So power is a problem not only in terms of pricing, but also quality of power, availability of power. So power is a challenge always. In terms of the global economies, world oil prices are rising, dollar is strengthening, Kenya shilling is weakening. those are also some of these macroeconomic challenges which we foresee as a